Nigeria's economy is showing strong headline numbers with a growth projection improving. Reserves now closer to $53 billion. Oil output recovering and inflation easing again. But beneath that optimism, households are still facing rising food prices, rent pressure, high interest rates, and an equity market that has wiped out trillions in value over the last few sessions. So the question is the economy finally stabilizing? And are we facing a potential for real prosperity? While our investors celebrating too early. So today we will break down the GDP, inflation. We'll talk about the outlook for the Naira, and we'll talk about the NGX sell-off, Geregu's bond scare, the stability of the Naira. We'll talk about oil prices as well, and what you should be looking out for, especially on the Nigeria economy in the weeks ahead. So if you stay with us, we'll have a lot to unpack today. Joining me to take a look at all of this is Oladipo Ajay. Oladipo Ajay is head fixed income and vice president at Chapel Hideham. Dipo, thank you for joining.
Yeah, good day, Dr. Okafor. It's always a pleasure to be on your program.
All right, thank you. Always a pleasure having you, Dipo. And everyone, thank you again for joining us today. If you are new to this channel, please like this video, subscribe to the channel, hit the notification bell so that you can always be notified when new episodes are uploaded. Right, Deepo, let's get into it. So this week we've seen projections from PwC that the Nigeria's economy is projected to grow at about 4.2% for the second half of 2026. That's premised on higher oil output and the reform gains that we've seen. Q1 GDP was about 3.89, and I think business is now forecasting that could inch to 4.5% for Q2. So the fastest in 5 years, if that happens. So are the headline numbers finally translating into real household and business relief, or are we still in a stabilization with that prosperity phase?
Well, to look at it critically, I think we are still trying to turn the bend of stabilization. As we speak currently, there's still groaning across the country, and that is premised on the purchasing power of an average Nigerians. To be realistic, Nigeria was heavily weighed based on the decision to actually remove subsidy. And that actually put a lot of pressure on household spending. And a lot of people at the point in time find it very difficult to actually have 3 square meal. And that's premised on the action of the new government to actually remove subsidy and also harmonize the effects window. And to be realistic, I think the decision was right. Maybe simultaneously there are other palliatives that would have gone in to actually cushion the effects of that. As we speak currently, when you look at it, it seems that now the government have been able to actually save quite huge expenses being spent on consumption. And that's not currently sitting in the hand of the government. So the problem is now how to actually move that huge fund from the hand of government into the hand of populace. Because when you look at that, government expenditure is now huge, but the consumer, which is consumption in GDP, is still very, very low.
Yeah.
And for you to actually enjoy that huge impact, so definitely we must be able to move that huge fund sitting in the hand of government into the hand of average Nigerians. so that they are able to consume. And some of the things that current government is doing makes a lot of sense, though, in terms of infrastructural development, because that will also spur economic activities, and that will also help business activity at the same time. But the fact that that will quickly translate to higher GDP is also another thing that we also need to look at. And there's a lot of other aspects of the economy that we all know that if the government can actually channel aggressive effort into, could actually push annual GDP to close to about 7%. And that's the power sector. Imagine that an average Nigerian cannot boast of a 20-hour power supply. You imagine what that would mean in terms of economic activity, and that could actually help our growth. As we speak currently, an average Nigerian could not boldly say that they fully feel, they are fully feeling the effect of of the reforms in terms of in their pockets, but they could have been feeling the effects in terms of maybe better road network, maybe better other ways in terms of constant
Electricity.
supply of
Mhm.
PMS and the like, and some other
Okay.
things like that that used to be more like a problem. And also the stability in FX is also another thing we also need to talk about, because as we speak currently, there's less volatility in terms of currency. So it means that there's predictability of Naira, which is
Okay.
also a plus, and that will also help also. But in terms of revenue that comes to pockets on an average Nigerian, of course, I'm not sure we can boldly say that we are really feeling that now. And that's why I said that we are more like at the point of that reform. So we expect that in no time that will also now translate beyond a physical structures and all these things into more like revenue in the pockets of an average Nigerian.
Yeah, I mean, a lot of people will push back and say, yes, while it was necessary to remove the cancerous tissue, which is the subsidy, from the Nigerian economy, but what about the approach? What about thinking through the process? What about having a holistic view before, taking that step? Because we noticed almost immediately when that happened, we saw what happened to the Naira, and people are yet to recover, on different levels. And you also talked about electricity or power sector being a major sector that could really unlock growth for the Nigerian economy. Therefore, that must be a rocket science. If from 1960 to 2026, we're still dealing with about 4,000 megawatts. It must really be something that requires rocket science to achieve.
Well, I don't think so. I think the problem about that sector is humongous. And firstly, is the fact that the sector is not fully liberated. And you understand that when you still have the participation of government in some sectors, sometimes it could actually be more like the dragger for that particular sector. And I will take you back to the telecom sector when we used to have Nitel. And I think one way or the other, United actually limited the level of development that we could have seen in that sector. But the emergence of NTN, Equinet, Glo, further actually expanded the telecom sector. And don't forget that it's not totally that Nitel actually disappeared. Nitel became MTEL, but it got to a level that it could not compete
Yeah.
with the speed of the private parastatals, and that's one way that Night actually fizzled out, and it became a thing of the past. And I think the same thing is currently still happening in the power sector. I understand the peculiarity of that sector, but currently, what the limitations that the sector is currently facing is that huge debt that's still owed to the sector. Over 4 trillion is being owed to the power sector, and the government is trying to actually find a way to pay down on this obligation. As we speak currently, the government has paid about 333 billion, and sometime in July, they are currently in the market to raise another 729 billion. And in total, the government would have raised about 1.2 trillion and that 1 year that will reduce the obligations to about 2.8 thereabout. But don't forget that even as at the cut-off date, it's not that we actually remove the cancer that's actually currently ravaging that sector. What we did was to take a stop at a particular day, and but don't forget that there will still be accrual on a daily basis because the debt spurs from uh, the structure of the sector. The embeds will take will lift power supply from the gencos and now sell to the discos. And most time, the at the end of the day, the money that actually come back to the gencos cannot be compared to the level of power that was lifted by Hembet. And that's premised on the fact that there's subsidy in that sector. What the government was trying to do at the point in time when they actually created that spectrum, where you have band A, band B, band C, band D, was to ensure that the people at the upper band are actually paying a cost reflective price. So let me give you an instance. On band A, you pay about 209 naira per kilowatt, and that's excluding the VAT. And on band B, you pay maybe around 67 naira. So it gives you an idea of the spread that the government pay on behalf of people on the lesser cadre. And on band C, you pay maybe around 50 something. On band D, you pay around 40 something. So it can give you an idea of how much burdens that the government carries on a daily basis. So I think that that will continue, except we actually liberate that sector. And no investor wants to come to any economy, into an economy where subsidies still prevail, because it means that you don't get your cash flow as a when due, and the government continue to hold you. You understand me? And you look at the case of Geregu, they actually defaulted on their coupon payment. They could boldly say that, oh, they have funds that is currently sitting with the government and they are not getting their cash flow and the like as an excuse. But however, I think that the government need to find a way to remove that burden and ensure that that sector is clear. And if you want fresh fund into any sector, of course, you need to ensure that the policies are right. And one of the ways to ensure the policies are right is to ensure that that sector is cost reflective. And at the same time, the government on the spot can now ensure that they increase the minimum wage of an average Nigerian. So what you are doing now, instead of paying subsidy, you are paying the money directly to Nigerians into their pockets. So as the cost of livelihood increase, they also have revenue that will actually cushion the effect of that. So because if you want fresh fund into the power sector, you must surely find a way to actually clear the sector and make it look clean for anyone that wants to bring fresh fund.
Yeah, I mean, people, we can spend a whole day really talking about all of this, the power sector, the tiered ways in which bills are being sent, or even the terms of salary payments or wages and all that. Compare what it used to be and what it is now, even in dollar terms. But let's stick to the numbers that was recently released by the federal government, as led by the finance minister in that briefing. Finance Minister Tawoyedele, he presented the reform scorecard, and about roughly 20.4 trillion in incremental resources. That's incremental revenue now coming through, but that's against about 31 trillion in incremental expenses. So you can see that gap of about 10 trillion in gap there. So what's that heavy wage that you're talking about, was saying the borrowing cost as well. So have the subsidy and the FX reforms delivered fiscal space that Nigeria needs, or are there still trade-offs that are still too painful?
Well, I think that um, the reforms actually delivered to a great level. It provided to us headroom,
Mm-hmm.
and if you look at our budget, what our budget used to be and what the budget is now, you can see that one of the reasons why we still need to borrow was because we now have more like a bigger budget. On average, now Nigeria run a budget of about 54 to 60 trillion on an annual basis, and that cannot be compared to what we used to do in the past. And I actually give kudos to the decision of the foreign governments to actually come out and actually open up that scorecard. For me, it opens them up to criticism, and people can actually pinpoint what they've done right and what they need to actually improve on. I just imagine that if the state government can toe the same line, because if you remember vividly, while speaking around the scorecard, he mentioned that this is the saving part of the federal government, which also means that there's some angles that belong to the state government. We have seen states that mentioned that they used to get about 4 billion on a monthly basis. Currently, they are doing close to about 21 billion. And
And they are
that
building
is
bridge and they are building overhead bridges with them.
you understand what we are trying to say. That it means that these people have capacity to actually pay some of these funds. On the part of the federal government, it's just because federal government is currently embarking on aggressive road construction across the nation. Because to be realistic, to a great extent, you need that. The connectivity, you need that for productivity. It doesn't make sense that a trailer would leave Benue to actually travel down to Lagos and the trailer will spend 10 days on the road. And that does not make any sense. I imagine if the trailer is currently conveying perishable goods, it means that by the time such trailer gets to Lagos, 70% of those goods will not be actually edible
Yeah,
again.
would have been.
And that would be a huge loss to farmers. So if we truly want that development that we're talking about, the government needs to actually do what they are currently doing. But however, the state needs to rise up to that challenges and focus on things that will impact the populace directly. I was looking at the budget, or sorry, the allocation to Ethiopia local government of budget on Friday. And I found out that Ethiopia local government get nothing less than 1.5 billion on a monthly basis for allocation. So I
Talking
imagine
about
if
Etios, a local government area of Lagos,
yeah,
right?
yeah. So if
Okay.
Ethiopia local government of Lagos is getting 1.5 billion on average, there are months that they get about 2 billion. There are months that they get about 1.4 billion. So average maybe around 1.5 billion. So the question is that what is Ethiopia local government doing with 1.5 billion to impact the life of people that reside in Ethiopia local government? The government has been able to free cash flow from the central, and
Therefore,
freeing cash flow from the
that's just
central.
about $1 million, so about 1.1 or about $1.1 million.
So, well, you are talking about it in dollar terms, but don't forget that in Naira terms, that's about 1.5 billion. And what does 1.5 billion means? Let me give you an idea what it means. And don't forget that we are talking about just one local government, and you have about 50 local government and SCDAs in Lagos. You have about 50 of them. So it means that if 50 of them is getting an average of 1 billion, meaning that there's 50 billion to local authorities in Lagos to use to better the life of an average Nigerian directly on a monthly basis.
Okay.
On a monthly basis. And so it means that if you decide to actually create a food bank for people that are the lower cadre of the economy, where maybe about 200 million, maybe 100 million for food bank on a monthly basis, that will help to actually subsidize living for people that are that lower cadre. Because currently you are talking about reform. During reform, there are sometimes that it could be very turbulent. But you need to find a way to reach out to those people that are the lower part of the cadre so that they can actually be able to actually survive times like this. So I think that there's a lot of money to actually meet most of these obligations. But the question
Okay.
is that what are we doing with the money is the question. Even the president one time mentioned that he doesn't understand why state. There's some state that the population is not maybe more than 4 million, and you are constructing overhead bridge for who? For what? What is the purpose? Sometimes it is not about the edifice; it's about the impact in the life of people that actually reside in your states.
Yeah, I agree with you. I mean, a lot of our leaders want things written after them, saying it was during my time that this was constructed or something. So I guess that is the baggage that a lot of our politicians have. But well, let's stick with the economy. So inflation dropped to 15.43 from about 15.91 for the month of July. Yet food inflation jumped to about 20.31. So is this inflation real, or is the food price surge about to reverse the gains and keep the CBN on hold longer for than the market hopes? Because we are currently now in the phase where we're expecting the MPC to begin to tinker with rates, but with food inflation still at these elevated levels, what options are before the CBN?
Well, for the CBN, like I said the last time, it will be premature for the CBN to look at actually lowering rates in their
Mm-hmm.
meeting next month. I felt that the best bet we could get is the month of November. So, like I said, the month of September will just be there for us to reassess what has happened between the last meeting and now. Look at what inflation is doing. For me, inflation seems sticky at this current level. And one of the driver that actually pushed the headline inflation down is the high low base effects. That's one of is high low base effects, and the high base effect is what actually pushed the headline inflation downward. Because, like you mentioned, if you look at the food inflation surge, and so it means that food prices are still on the rising. And but the core inflation, we notice that there's sharp drop in core inflation,
Mm-hmm.
and so it simply means that the government needs to look at how they can actually work with farmers. And on the side of the exchange rate, we have seen stability in that regard. So we cannot say that it was as a result of volatility in exchange rates. So I think that the government needs to look at what is happening in the agricultural sector. What are the farmers going through? What is the harvest level? The current um, aggressive rains that's currently happening. Is he actually affecting farmer aggressively? What is
Mm-hmm.
the productivity from the farm? And these are some of the questions that we need to ask. And how can we mitigate some of these things? We are moving towards the the harvest season. By September, we'll move into harvest season. What is the likelihood that food inflation would drop aggressively? These are some of the things we need to look at, and how can the government step in to help to actually reduce the effect of this on the economy. So I think on the part of the monetary policy guys, they will continue to look at inflation as a pointer to whether to actually shift ground upward, or to maintain, sorry, to shift downward, or to maintain status quo at the current levels.
Okay. Deepa, another troubling data that came out during the week is the CPI data that shows inflation surging to roughly about 33.8% year on year for rent. Okay, even though the headline inflation eased. So, how sustainable is this rent trajectory? What does it mean for household purchasing power, and how does this really compare, even to other countries in the sub-region? And I think the major drivers for that would be Lagos and Abuja. I mean, this is a worrying trajectory, especially for young professionals starting up.
Well, it's it's actually truly worrying because when you look at the level of jump, it's actually massive. And also the problem currently ravaging that in that sector is purely the deficits in that area because it's purely demand and supply markets. So look at a place like Lagos that is heavily densely populated.
Populated, yeah.
So it means that what is the number of housing available to people? What is the number of people that are currently in Lagos? And so as a result of that, this demand is now currently outweighing the available houses in Lagos. And there's not much that the government can do immediately. When I mean immediately, is that trying to change the trajectory within a month. So I think what the government needs to do firstly is what government needs to actually work around the low housing scheme. We have seen that in the past. We've seen that during the Jacondi era. We have seen a lot of them around.
Even during, sorry to butt in deeper, even during Buhari's time, I know that former Governor Fashola was in charge of some of those housing constructions across the country. I don't seem to hear a lot about it now anymore. I don't know whether they've stopped that construction program, or I don't know if there's any update on that at all.
Well, I'm not sure I'm hearing anything in that regard, but the ones that I can actually confirm to you is the Renew Hope housing scheme. That is for the current government. I know one that is around after around the Bejuleki currently that the current administration is currently working on. And but I think that is not enough to actually satisfy the need of the people in such a time as this. For you to actually solve some of these things, you need to actually work with policies, and you also need to actually compete aggressively in that sector. So how do you mean competing? It means that you also need to be a supplier to that market. Because when there is deficit in the market and the government on its part is not supplying into the market, of course you give all the power to the landlord and the landladies to make their calls. We have seen situations whereby people get to pay 100% increase on an annual basis for on their rents, and to me, I think it's crazy. It's crazy because even you tend to hear stories of some people that they need to pay 2 year rent in advance, and that doesn't make any sense. When you look at advanced country, people pay their rent on a monthly basis. So I think that maybe because people pay on another baby, maybe that's the reason why they can just wake up and increase because they know that you pay. So it means that, oh, the last time you make payments was last year. Maybe they need to change to where you pay on a monthly basis. So with that, it will be
Isn't there
very
a law?
difficult for
Isn't there a law, for instance, in Lagos State? I know that there's a law about stopping this idea of charging tenants like annual rental payments. And I think I think there was such a law that came into force that moved or that asked landlord or owners to charge on a monthly basis. I mean, I'm not sure, but I think I had something like that in the past.
so even if there's a law, it's
I mean,
another thing for there to be a law.
you can't enforce it, right?
You can. So the problem is this: what is the government doing to enforce most of these laws? There are laws that I'm very sure of that you can't collect more than 1 year rents. So in a situation whereby some landlords are asking for 2 year rents, what is government doing in this regard to actually stop some of these things? Because these are some of the things that is putting pressure on an average individual in this country. And the rate at which this increase happens, I can bet you that these are some of the things that's even fueling corruption in the country. Because when you get to a level that there's pressure on to actually meet your accommodation expenses, sometimes you tend to do what you don't need, what you are not supposed to do, just to ensure that you are able to actually meet your obligations. So the government needs to come in and come in now on some of these things. And another thing also is that beyond that, the government needs to look for partners. There are a lot of partners globally that can actually partner with government in this regard. The government needs to partner, look for partners globally on how to actually reduce the housing deficit in the country. It is too crazy. And beyond that as well, I also think that we need to ensure that we develop other states in line with these metropolis states that we are talking
Yeah,
about.
I was going to ask about that because that would mean a lot of people being forced to relocate or even share apartments and all that. Maybe being forced to relocate to neighboring states, especially in the core areas the core cities where this is majorly prevalent, like Lagos and Abuja. Lagos, for business, Abuja, maybe of political office holders and all that are the ones who hold sway in that area.
So for business, imagine that you can stay in Ibadan and join a train of an hour to Lagos to your office, or maybe an hour 30 minutes.
Lagos,
And
or Ibadan or Abeokuta.
that's exactly what I'm saying. You understand me? So if I can join a train from Abeokuta to Lagos, so it means for me that I can stay in Abeokuta. That would reduce my living expenses, and that would reduce the pressure on my finances. And I can even live a more comfortable life because that is free from the hustling and bustling of Lagos. You understand me? So I think that these neighboring states are not maximizing the opportunity that this problem is putting on Lagos. Because if they are truly maximizing it, of course, you would have seen the expansion into Lagos from most of these states. You get what I mean? Like, Ogun State should have find a way to actually pull people from Lagos to Ogun State. What I mean, pull people, you lure them with amenities, you lure them with comfortable life standard of living, you lure them
Yeah.
with many other things.
Ogun
You
State just
understand? So,
recently completed an airport, so maybe that's part of that.
airport to travel from Lagos to Ogun State.
Deepo, let's switch gears a bit. I know there are a lot of issues, a lot of burning issues, especially that affects the everyday Nigerian. If we just stay on this discussion, we'll spend the whole day here. Deepo, let's talk about the equities market. So the NGX extended one of its longest losing streaks of 2026 with market capitalization shedding about 5.4 trillion naira over, I think, about 8 trading sessions. And the all share index is now retreating to about 239 to 240,000 zone as of Friday. So, what is really driving the breadth and intensity of this week's sell off? Is it still profit taking? Because I keep asking you that. Is it still profit taking, rotation into fixed income, or something more structural?
I think that we mentioned this thing last week, and I remember if you look at it critically, I think it was in July segment where we mentioned that we'll likely see more profit taking in the month of August.
Okay.
And our view is premised on obligations. That we're getting to school fees period, people will shed weight to meet obligations. We also highlighted that Dangote will be coming in up in September, October. A lot of portfolio managers are currently preparing space
Mhm.
for these big
IPO.
IPO that will be
Mhm.
coming to the market. So things has not changed because there's nothing structural that's currently happening in the market that necessitates the level of sell down that We saw,
Okay.
and
Okay.
don't forget that he wasn't broad based, because even in this drop, there's still some names that are actually enjoying marginal upside. Not there. We've seen Airtel moved. We've seen Access. It may not be just aggressive gains, but we've seen Access climbing even while some other names are actually getting beaten. So he's not market broad base. He's basically just people taking profit in selected names to create room for other demands that's currently coming on them. And also, like we mentioned, there's also still opportunity. People are still, like you said earlier, on rotating across the market. And there's sometimes you look at the market like, oh, I'm currently holding this instrument. Oh, I've made up to so level of return on this. But this is actually heavily underpriced. Okay, let me switch from this to this. So, of course, we see that happen in the market where you see an investor telling you to actually sell a particular names and actually reinvest in another. That's also happening in the market. So currently, what we are seeing is nothing extraordinary in terms of maybe there's a crisis that led to the level of weeds that the markets actually shed in the last 8 trading days. So it's purely profit taking and also making provisions for the next Dangote IPO.
Okay. And we also learned during the week that Geregu is now going to make do with the payments that they missed. And I think there's the suspension of universal insurance after Nikon revoked its license. So this is some of the corporate actions last week. Veritas Capitals also talking about additional shares from a private placement, and I think Emzos is planning to have a bond listing. Also, how are these events shaping the market sentiment right now?
Firstly, if you look at Geregu, I think what happened last week was a bold step on the part of the owner to step up and actually make good their obligations to investors.
Mhm.
It could be late, but at least to a great extent, they try to redeem the image of the organization. Of course, the deed has been done because to some extent, I put a pressure on the corporate credit in the market. However, the decision to actually make good these obligations
Yeah.
would to a great extent, and I think so the next audio will be the January coupon payment and parts payment on the principal.
Yeah.
That's the next audio for Geregu. So a lot of all eyes will be on Geregu in January to see whether they will make good the obligation on the due date or we'll still see this level of happening. But for me, I think that, like I said in the past, I feel that it's just a lack of preparation on the part of the management because this should not have been anything so difficult for them to solve. Geregu is a big company. This is a company that's been heavily owned by the government. Like I said earlier on, last month, the government paid about 333 billion to Gencos. And I also feel that Geregu partook in that benefits. And Geregu paid a dividend of 9 naira to the shareholder,
Yes.
totaling about 29 billion in the month of June. So if it is a company that does not have capacity to pay, I doubt they would do that. All you need to do is remove the 6 billion from the 25 billion. So
Now
you still have
I'm
about
pay the
19. So you
balance to
see,
the
so
shareholders.
yeah, you still have about 19 billion to pay to your shareholders. So it's not. So I think that it's just lack of preparation or
The planning issues.
miscommunication
Yeah.
among the old owner and the new owner, and someone dropped the board along the line. And it's good that they've retained their image now. On the part of the Nikon suspension of this universal
Universal
insurance
insurance. Yeah.
license. I think it's on the back of recapitalization. Recently there was a deadline for recapitalization of all insurance companies.
Yeah.
So the ones that failed to meet the deadline were actually their license were suspended because Nikon is trying to actually improve the capacity of that industry as well, to cover risk, to take risk, and to insure risk. And I think that's what happened in that regard. EMZO bond listing, that will further deepen the available bond in the corporate credit space. We don't have so much of them. But when you have some of these things come to the market, they bring in additional return to investors. Of course, that return comes with risk, just like the one we saw
Exactly.
around Geregu. But
Geregu.
the onus fall on the investor to do their research very well and make the right calls at any point in time.
Okay, thank you for that, Dipo. So with banks results still delayed pending regulatory clearance, I think some banks their results are still being delayed, and the Dangote Refinery IPO also approaching. Is the current equity correction a healthy pause that creates an entry point, or is it a warning of further downside? I mean, if what I'm asking is this the best time to lock into some of these key names now that I've shared with?
Of course, there's always a good time for people to enter the market, and I think one of such time is now, because when you want to buy is not when everybody is buying. When you want to buy, sometimes is the time when you have done your analysis and found out that people are taking profit, and you feel that the valuation is still very much the instrument is now maybe undervalued. So you see upside potential. So you take advantage of some of those names. Some of the names that we keep shouting on this program, they are credible names that for anyone looking to invest for a long time. If you're a long-time investor, you are not investing for a month or 2 months. You are investing for 3, 4 years. There's nothing that stops you to start layering your portfolio in
Mhm.
such a time as this. You don't want to wait until when the aggressive momentum starts. When you look at some of the bank names, we are seeing profit taking in some of these bank names. And the profit taking could be as a result of the delay in release of their results as well. And don't forget, most of the key tier one banks ensure that they release audited statement in their half-year financial.
Yeah.
Names like Access, GT, Zenith, UBA, and also First Bank. So I think that most of these companies that they are currently waiting on their audited financials, which will
Yeah.
further be submitted to central bank for approval before they release to the market. And I feel that you don't want to wait until when you start hearing about this attractive interim dividend. That we know that at least two of these names would declare interim dividend, considering their antecedents. Names like GT, names like Zenith, you are very sure that they will come to the market with interim dividend. And we could actually have very good or attractive interim dividend from some of these things, considering their performance that we saw in Q1 2026. So I think that this current reversal in market present opportunity for people that have idle fund and looking for where to actually push the fund.
Okay. Thank you for your analysis there, Dipo. Let's switch gears a bit now and look at the fixed income market. So the federal government has raised anywhere between 6.5 to 7.2 trillion. And now that's I'm trying to um, look at how the non-competitive allotments are accounted. Anywhere between 6.5 to 7.2 trillion via bonds so far in 2026. The last auction still drew very solid demand, even as equities sold off. What's your impression of the last auction and the amount that government have raised so far? What more is to come for the rest of the year?
Well, what we have seen in the bond space and is nothing out of place.
Okay.
What we are currently seeing is that we're seeing more like a market that's now bigger, that has appetite to actually consume more. The last auction, the government was able to take about 1.5 trillion, both from competitive and non-competitive bids at the last auction. So it tells you the level of liquidity that's currently sitting in the system as we speak currently. So raising about 7.2 trillion in the year, and this is just on the bond side. It means that there's still headroom to actually raise more. And don't also forget that there's a lot of raising too in the treasury bill side, because we've seen governments raise more than what mature. And this will also count as part of the borrowing for the year 2026 as well. So we feel that we will continue to see more. And but what we also think is that the tone may not be as hawkish as what we have seen in the past, in the last quarter of the year. Don't forget that we have started campaign already. So I expect by September, the campaign would have switched gear. By the time we get to the beginning of Q4, of course, it will be on another speed level. And at that point, it's not a time where economy activity will be aggressively upstanding. So we don't expect at that particular point in time for the government to still continue to come to the market and borrow aggressive in such a time as that. We expect it will be a time where the government will tone down the aggressive borrowing structure and reduce. Also, what that would mean is that it would mean short in supply of bond to the market, and that would actually improve the pricing of the instrument in the market. So, and also on the that will also affect what we are currently seeing in the treasury bill space as well. The treasury bill space, we expect to see more like a reduction in the level of aggression that we have seen in both Q1, Q2, and Q3. I think in the next 2-3 weeks, we will be seeing the calendar for the last quarter on the part of the treasury bill side, and that's for a good to a great extent will guide us on how we will look at the remainder part of the year on the bond side.
Yeah, what's your expectation for the coming NTB auction this week?
So for the coming NTB auction, now we have mentioned that we will likely see convergence between the OMO space and where NTB is trading. So I won't be surprised if rates on the T-bills is now trading going back to around that 1760 levels at this auction. And the view is
but it closed at 1759, right? At the last auction.
Yeah, so that's why I said around 1760 levels, because I expected to actually trade back to where it closed at the last auction. And the view is just premised on the fact that people would rather go for the OMO auction since it's now open to all than to actually to come to the NTB market and take rates and buy at ridiculously low rate. So when you're looking at the instrument trading the 182-day bill that we have seen around 16.4 thereabout. When you now compare to that same instrument that is trading around the same corridor on the OMO space, you can get as high as 19% in that space. So if I can get 19% in the OMO space, why should I come to the NTB side of the market to come and buy a related instrument around 16%? Because I have close to about 250 basis points spread that can make going to the OMO market. So that's one of the reasons why I feel that we may not see that level of aggressive demand on the NTB side like what we have seen in the past, because there's another window open. But what could actually change is with the fact that last week, the market was expecting the central bank to come to the market, but the central bank surprisingly didn't come to the market. They left the rate market liquidity at elevated level of over 5 trillion. By the
in terms of offering OMOs, right?
Yeah, in terms of offering OMO. So what that has led to is that has put a lot of pressure on the secondary market, almost secondary market, even to the extent that the December 29 OMO that was issued traded as low as 1890. This was instrument that was issued not of 20%. So it means that if central bank is coming back to the market this week, they may likely not raise as high as what they did at the prior auction. So what that will also mean, the convergence that we're talking about, it means that the OMO rates will drop. You understand why the treasury rates will inch up for both instruments to have to meet at a particular point in time. Of course, we don't expect them to align automatically because even in the past, you tend to have that premium from OMO instrument compared to NCB. But however, we feel that you get to a level where the rates will be very close, and that's at that point in time, both instruments will continue the downward movement.
Yeah. Deepo, if you were bidding at this auction on Wednesday, what rates are you going at for the
For which,
NTD?
for the
The one
NTB,
year. Yeah.
yeah. So I would like to stagger my beat if I have huge volume. So it means that I will stagger my beat from around 1740. I'll stagger my from 1740 upside because if the instrument is trading 1725 in the market now,
Mm-hmm.
so it means that I will start from a low of around 1740. Then I will stagger my beats upside.
Okay. So, but you still expect it to close around the levels it did, I think about 2 weeks ago. Is that correct?
Because now, like I said, the Omo window has opened another level of opportunity to investors. About
Mm.
just that, the peculiarity of the 1 year paper is
Yeah.
just what we need to talk about as well. Because a 364-day paper is different from all these short-dated instruments.
Yeah.
So sometimes some investor may just want to lock in for 1 year, and they may not want to care about reinvestment risk and exposing themselves to investment risk. You understand? Such investors are the kind of investors that you will want to see at this current NTB auction. Because if you are as someone that is shopping for yield, they would rather want to wait for the home. And just like what we said, the NTB is scheduled. So it means by Wednesday, we are expecting the auction. But for the OMO, you cannot determine when it comes. Like I mentioned, the market was anticipating the central bank to come and issue OMO bill last week,
Yeah.
but they failed to actually come around.
Okay. All right. Deepo, let's switch gears a bit and talk about the foreign exchange, Naira, and some global outlook. So the Naira has held relatively steady. Reserves are above $52 billion. And earlier capital flows, we've seen that strong flows as well. So, how durable is this FX calm that we have now, given the spike in global oil prices and the renewed Middle East tensions that we're seeing? How durable will this FX calm be for the economy?
Very durable, very, very durable, and very, very, very durable. Because currently we are enjoying oil price at elevated levels. And
Hmm.
beyond that, we have been able to ramp up production to around 1.7, 1.8 million barrels per day. This is a country that barely meets the quota of 1.5 million barrels per day. And so it means that beyond the production side, we are also enjoying elevated oil prices. And what that will mean is that will mean that all FX generating capacity of the government, and that will push in the effect of what we are seeing in the
Yeah.
reserve. Our reserve is currently not of $52 billion, and that of course when you see your reserve sit at such a level, it gives you that level of confidence. And at the era of exporting crude, importing refined product, that era has gone. This is an era where we have a local producer of the product within the country. And so we don't necessarily need to spend FX to import some of these products back to the country. And also, this is a big business that produces close to about 650,000 barrels per day. So beyond the local supply, is also supplied to other African neighboring countries, and that will mean more FX inflow into the economy. This business also have a big fertilizer business. That Nigeria barely consumes 15% of it, so it means that around 80%, 85% is exported
Yeah.
outside the country, and so it gives an idea of the level of um, capacity for the country to generate or bring in FX inflow or attract FX inflow into the system. And when you hear news like the current IPOs that Dangote is doing, both the private placement and the current, the expected IPO, they are looking to raise about $5 billion, and the purpose is to use that to expand the current production capacity to 1 million barrel per day. So it gives you an idea of what we are talking about, and that level that we said that the currency, the reserve is sitting at a very, very strong and durable level. And that's why I said that I don't think there's any risk on the reserve. As we speak currently, based on the last release by the central bank, the net reserve was announced as $40 billion.
Yes.
And it means that free of any encumbrances, we have $40 billion that belongs to us. And when you look at that, that's giving you close to about nine months import cover. I doubt there's any country that is close to that in Africa, that is close to that level of import cover in Africa. And these are some of the things that investors also look at when they want to invest in any country. And that present Nigeria ahead of the curve for investors that are looking for where to shop for our funds.
Okay. I mean, it's something that we'll keep an eye on, especially now that politicking has started. We started seeing some political leaders weighing on, especially on issues of subsidy, whether they want to keep it or whether they would reverse course. But let's stick with oil prices. Global markets this week saw oil heading for a second weekly gain. So I think Brent, which is our own staple there, is trading near $94 on the tension in the US. I'm sorry, tension in Iran. We're currently waiting for the US package of economic sanction on Iran. I think that is to be released anywhere, I think, from Monday or thereabout. So that's something we also need to keep an eye on. So the equity funds are also recording inflows. As we're also seeing sell-off in bonds, especially in the US as well. We're seeing major sell-off in bonds as well. So my question is, how does this whole global development feed into the Nigeria's oil revenue, the FX liquidity, and investor sentiment?
Like we have said earlier on, I think it's positive for Nigeria, but maybe negative for Nigerians. On the part of Nigeria, it means more FX inflow on the part
Mhm.
of Nigeria. But on the part of Nigerians, it means that higher cost of livings, because that will filter into energy cost, which one way or the other will push your living cost higher. So on the part of Nigeria, Nigeria is on a great pedestal, and Nigeria is balling where prices are currently sitting, and but it's just that the effect on an average Nigerian. So it means that will continue to put pressure on inflation, and which in turn could actually lead to the policymaker to think twice before lowering in interest rates. And as we speak, when inflation is on the upward trajectory, what it will mean to the economy is that it means that growth, one way or the other, could be stunted because the policymaker will not be able to lower rates, which will further spur growth. So they want to keep rates at elevated level, which one way or the other could actually impede the level of growth that would have enjoyed in the country. But beyond that, I don't think Nigeria is so much exposed into that regard. Another thing that could also be that could also happen to us in terms of is the level of investment into our market in terms of foreign portfolio investors.
Mhm.
Now that bonds, they sell down in bond instruments in the US, rates has moved to attested pre 2007 levels. So what that brings to mind is that we'll not be seeing that level of inflow into emerging markets as we used to see in the past. But maybe for Nigeria, one way or the other, we still have good level of carry trade opportunity for some of these investors. Like we highlighted earlier on, we see our OMO rates are not of 20%. So even if you are investing in the OMO market, and when you compare it to where maybe a related treasury instrument is trading in the United States, I'm very sure you still have close to about 8,600 basis points spread. And that's enough to push in any effect of the risk you are taking in terms of exchange rate, in terms of any other risk that you are taking. And that's one of the reasons why I still feel that Nigeria still have opportunity as a destination for most of these foreign investors. But bearing that, I don't think there's anything extraordinary that will actually affect Nigeria in regard to this.
Yeah, talking about bonds again, Deepo. We've seen major economies, the US inclusive, even Nigeria, refuse to now issue that long-dated instruments, especially the 30-year instruments. Is it, I mean, for Nigeria, I know there are natural buyers for the 30-year instrument, but it doesn't look like that here, like that in the US market for the 30-year instrument. What's the factor? What's making countries to be reluctant to issue the 30-year instrument?
So it doesn't make sense for you to issue long-dated instruments during the elevated yield regime.
Okay.
But imagine when Nigeria issued the 2035 bond. Imagine that we issued a 30-year bond at 22.60.
Mm-hmm.
That particular, it means that you'll be carrying that liability for 30 years.
All right.
That will put a lot of pressure on your cost of servicing debt. And that's one of the reasons why you see in times when rates are at elevated level, most economy are trying to stay between the short end of the curve to the belly of the curve. And that's one of the reasons why you are seeing Nigeria. And like you highlighted, Nigeria, they are off ticker of these long-dated instruments. Most of them are still in the market on a daily basis, asking for the government to think twice. And that's one of the reasons why we felt that we could have had a normal yield curve if the crisis in the Middle East has not erupted in February, because we're already on that trajectory where rate was on the downward trough. So you imagine rates at 15%. If you look at the last 30-year bond that was issued in 2023, that's 2053 maturity.
Yeah.
The coupon was 15.6. So it means that if rates come down to as low as 15%, the government can actually thought about it at that particular point in time to go back to the market and issue a 30-year bond. But now that rates are back up, rates are around 17, the government still feel that it doesn't make a good sense for anyone to actually raise a long-dated bond in such a time as this. Of course, like you said, the pension fund administrators, they like long-dated instrument, a 30-year bond, they like it, 20-year bond, they like it. Insurance company as well, they also a very good player in that segment of the market because of the way they manage their books. They are more like, they do more like asset liability matching. So it means that you have access and you have liability, 30-year liability, you are looking for a set of 30 years to match
Okay.
that liability so you are not exposed to mismatching.
Okay. So, Dipo, as we begin to wind down, looking into the rest of the second half towards September MPC, the Q2 GDP print, and the start of the 2027 campaign election season. What's the single biggest upside surprise? Single biggest upside surprise and the single biggest risk you see for the Nigerian economy, bonds and equities?
The biggest upside surprise for me is rate cut in September.
Okay.
The biggest upside surprise. And the biggest downside surprise for me is rate hike in September.
I mean, we don't see that happening. Inflation has come
So,
down. So,
that's why I said that that's going to be a surprise for me. It's
okay.
going to be a surprise for me because what that will mean to the market is that yield we actually inch up, prices will drop, and also that will also affect what we are seeing in the equity market. We could actually lose some of the gains that we have seen in the equity market because if the fixed income market, if rates actually move upward, we'll likely see some investor rotating out of the equity market into the fixed income market, and that will likely put pressure on the equity market. So that's why I said it's going to be also a surprise to me. And for me, so just like what we said, the only thing that can push that is if we see astronomous growth in inflation figure. So it means that inflation figure for August and inflation figure, maybe inflation figure for August, because that's the only figure that will be out before the meeting. If we see something out of the world and they feel that they need to quickly curtail that. Another thing also that could also lead them to is if the crisis in the Middle East turned to a global crisis, indeed, every economic wants to protect their currency at that particular point in time. And that will actually force the hand of monetary policy guys. And that's why I feel that the warning that US has been pushing out around Iran, I also think that both parties needs to come back to the table and solve this thing amicably. It's not only the emerging market or the frontier market that is feeling the pain. I also noticed that even people in advanced nations are currently feeling the pain. And all we need to do is settle this thing amicably and let us go back to a better life. Where look at where we're saying currently now, oil price in Nigeria at the pump stations around 1,250 naira, and this is a product that we used to buy around 750 naira. So it means that it has grown. The price has gone up by close to about 70%. So imagine that we are able to go back to where we used to. So it means that automatically inflation will drop, and that one way or the other could actually force the hand of monetary policy guys to do otherwise.
Okay. Right. Big boy, if you had a final message for our viewers, retail and institutional investors, what would that be?
My final words remains that the volatility you are seeing in the market, what you are seeing in the market is normal. Market does not go up perpetually.
Yeah.
You see retracement. Retracement is to give room for people that actually missed the initial rally to join the rally. And we have mentioned quite a number of sound stocks here on these channels that we know that have been trusted, and they are trusted and tested. They are tested and trusted. They have been able to stand the test of time. And we have mentioned names that we know they are based on fundamental. And so if you are a long-term investor, a 2 to 3 year investor, of course, there's nothing that stops you from actually investing aggressively as you speak currently. Imagine yourself like about 3 years ago. Think about it. Where was Presco trading? Where was Okumu trading? Where are they currently trading now? It gives you an idea of how market fundamentals move. So I want to say that the market is not punishing anyone currently. The market is preparing, providing another round of opportunity for people that miss the initial rally, or for people that have idle funds to further put into the markets.
Right.
Thanks.
Thank you so much, Deepo. Always a pleasure having you here on the Edge, and thank you for coming to share your insight as always.
Thank you very much, Dr. Carver. It's always a pleasure to be on your program.
All right. Thank you, everyone, for joining us this weekend. If you do have any questions, either for me or for Deepo, please put them in the comment section. I'll be there to read them and respond to all your questions. Again, if you are new to this channel, please like this video, subscribe to the channel, and hit the notification bell. And for everyone, please don't forget to like the video on your way out. I'll be back again next week. Take care, everyone. Bye.